National house prices have gone backwards, the average around the country down 0.6% in the 3 months to January. Of course, the extent of that slowdown depends on where you live. CoreLogic RP data says 4 out of Australia's capitals saw growth in the quarter, while Sydney saw a 2% decline, in turn losing its property crown. Melbourne is basking in its new title, overtaking Sydney as property king. It's simply cheaper to buy in the Victorian capital.
To put this into some context, the median unit price in Sydney is actually higher than the median house price in Melbourne.
Darwin and Perth values declined in the past 12 months. Melbourne surged 11%, but since the GFC in 2009, Sydney outperformed, with property prices surging a massive 73%.
From here, the rate of growth in Sydney is going to continue to slow. I think certain pockets will still see fairly strong demand.
Affordability remains a problem and worsened in the 3 months after Australia's big banks lifted variable mortgage rates independent of the Reserve Bank. The Housing Industry Association says while the ratio of mortgage repayments to earnings fell at the beginning of this decade, they recently returned to about 40% of income.
Earnings growth has slowed to its lowest rate in about 2 decades, and that's partly related to the economic weaknesses that we're experiencing at the moment.
That's likely to put pressure on some borrowers. Credit ratings agency Moody's is expecting an increase in the number of people defaulting on their monthly home loan repayments this year.
I think it will be pretty mild in general for Australia across the board.
But greater for those in states exposed to the commodities sector, although most borrowers are ahead on their repayments.
So I don't think we can deny that the downside risk is increasing.
For buyers, there'll be more choice.
And for people that are selling, the real message is you need to be more realistic about your selling price, because conditions are going to be tougher as the market does slow.
The Reserve Bank Board meets tomorrow for the first time this year to discuss interest rates.